Marvin L. Storm. We're here with Michael Butler and Josh Curtis. I'm going to ask Josh to talk a little bit about his firm, what they do, where you're located, and just give us a little idea. And then we're going to have a little chat here about how they found their way into the venture, investment banking environment and facilitating business exits. So Josh, why don't you get started here and just talk a little bit about yourself, just a very brief description of your background, and then talk a little bit more about what your firm does.
Sure. So I've been in investment banking for about 15 years now. Prior to that was in commercial lending and then in strategy and kind of finance for a transportation logistics consulting firm. But the bulk of my background is investment banking. And our firm, many describe as a boutique investment bank. We are really.
So what does that really mean when you say boutique investment bank? I mean, we have Goldman Sachs and other big firms that are, I guess you'd call them mega investment bankers. So what is a boutique firm all about?
Yeah, so the breadth of our service offering would not be, the breadth of Goldman Sachs. We are really focused in a narrow niche, working with founder owners, most oftentimes, probably between, I guess I'll just say less than 100 million in revenue. We certainly have done deals with clients above that, but I would say on average, most of our clients are founder owners, owner operators who run a business, throughout North America that either want to sell that business, want to gain liquidity in some fashion, want to grow the business, maybe by way of acquisition, or have some need for capital, whether it be debt or equity in their business. So think of us kind of all things around mergers and acquisitions within privately held businesses. We're not taking companies public, right? We're not doing stock offerings, things of that nature. We are working with founders who most of them have run or operated their businesses for 25 or 30 years, and they're really looking to transition in some fashion.
And you mentioned that you had, some other relevant experience prior to, getting involved in this boutique investment banking career that you're now involved in. Just give us a very brief overview of that.
Sure. So I started in a management training program within a regional commercial bank. So I got to see all aspects of how banks worked, both on the retail side, commercial side, investment side, and then really spent my time in what we would describe as middle market lending, lending money to business owners. So I started on the credit side, spent time underwriting, really got to understand how businesses operated, financed many acquisitions, and then from there, is what really got me into being an advisor on transactions.
Mm-hmm. What would you say are some of the, basic characteristics, personal characteristics and strengths that have contributed to being successful in what you do today?
I would say definitely being personable. This is a people business. We have a kind of a saying internally at Footprint now. We want to work with people that we like and that we get along with. These processes are stressful. You spend a ton of time with the people. We always joke. I could tell you the schedule of every one of my clients, what time they wake up, what time they go to bed. Everything about their wife and kids. You name it, we learn about them because we're just talking and spending so much time with these people, right? As you probably well know, Marvin, when you're going through this, think about, how consuming buying a house or selling your house is. That pales in comparison to this process, right? It is the most important thing that our clients are going through at the time. And we talk to them, get emails from them, text from them at all hours of the day and night. So I think, being in a place where you can understand, empathize with people, really help guide them is an attribute that I think is really important for this role. I think being detail oriented, I think defending clients, their positions, helping them prepare. We have to be multifaceted in terms of our expertise, right? We spend a lot of time on accounting. We spend a lot of time on legal. We touch operations and HR, and it really is a wide variety of the things that we deal with. And then the same in terms of industries. I mean, we learn a lot about a lot of different industries. I mean, we've done deals in software and distribution and manufacturing and healthcare, business services. We touch a lot of different things. So being able to get up to speed quickly on a business or an industry that we haven't worked in is critically important. And then I think the last one, from my standpoint, is being really hardworking. One of the things we say in some of our materials, you're not going to find anybody that outworks us. And that's not necessarily in terms of hours. Sometimes it is, because these transactions peak and valley. So there are times. I mean, Michael, last New Year's Eve, I think he and I were talking at 8 p.m. Eastern time on New Year's Eve, trying to get a deal on the West Coast closed. And those types of things happen. And you've got to be willing to kind of put certain things aside, because the time sensitivity of these deals is critical at certain junctures.
Yeah, I remember sometimes in my careers, that 11:59 on New Year's Eve, you can't go to 1 minute past that, or it's not going to happen. You lose a lot of benefits by jumping year, and
sure.
Deal just has to get done. So anyway, as a seasoned professional in the M&A and investment banking field, what changes do you see on the horizon in the next year or two, perhaps, that is going to be impactful to business owners, or could be impactful in the future?
Michael, why don't maybe you start that one?
Yeah. I'm a big fan of the use of technologies and how they can make us more efficient at helping sellers find the right buyers and so on. The sort of, the old school matchmaking of who do I know and that sort of thing is certainly helpful, but expanding your horizon beyond who you know. There's so many different private equity firms now. There's so many different corporates that are making acquisitions. And with that, finding technology platforms that can help link us up in the right way is helpful and useful. We talked in a recorded podcast about the use of things like virtual data rooms. That just makes the flow of information that much better and easier. So I think the use of technology will certainly enhance the process. Hopefully it also shortens the time frame in which transactions get done, because we've talked about this concept of deal fatigue if things go on too long. So that's the biggest thing I point to. I think better use, smarter use of the tools that are at our disposal. But you certainly can't, like Josh said, you certainly can't discount the human side of things. This is someone's legacy. This is their lifeblood, if you will, their baby. They've brought to life this business, and it's an emotional process of backing away from that. It's like marrying off a daughter or a son or something like that. It's a very interesting process, and it doesn't go without a couple of hitches. There's always things that will happen up until the very last minute, and we don't want them to. They do.
So Josh, why don't you tell us, if you could talk to your 30-year-old self today and give them advice from the perspective of where you are today, what type of advice would you give that 30-year-old young guy that's working hard in the banking industry or wherever you were at the time?
I would definitely say choose the right clients, choose the right people that you do business with. Life is too short to work with people that have unrealistic expectations or demands or personalities that just make things feel like they're not worth it. I would say continue to have a long-term view. I think I think sometimes in the deal world you can get so focused on short-term gates as opposed to kind of maintaining that long-term that long-term objective. And then I think it's definitely have balance. I think we end up working really hard in this industry, and I think it's important to to maintain friendships and be close with family, and spend time to be physically active and eat right and do those things.
Cool.
So that would be my advice to my younger self for sure.
So, Michael, when you look at the M&A investment banking field today, in your firm specifically, do you provide other types of services and consulting fees, consulting engagements on a fee for use basis, or valuation services where you're, actually providing fee-based valuation services? Do you provide those? Or are you strictly in the investment banking, mergers and acquisition field?
Yeah, maybe I'll deal with the last part of your question first. We don't do formal valuations. There are a lot of firms out there that do that. We've got affiliations with people that do that. What we'll do, though, is we'll provide a market valuation for our customers or potential customers. In fact, I was talking to a gentleman today, and he's thinking about his company and taking it to market. And the first thing he wants to know is, he goes, I have no idea what this thing is worth. And we will help him do that. Well, if we get the financials, if we can understand the business, he can give us some data points around its growth, its trajectory, the industry, and so on. We'll look at comparable transactions where, as you might guess, we subscribe to quite a few databases that give us comparable transactions, and we'll be able to tell that individual, here's what we think your company will sell for, based upon its size, location, growth, and so on, all those factors. And that's a good basis as to whether they decide to take the company to market or not. If it's something they don't feel like has ripened enough, and it's not ready, and it's not their expectations aren't up to the proceeds aren't up to their expectations, I should say, then it can wait. But to answer your question about the services, we provide sell side services, as we call them, and the sell side is when we're working with the seller, advising them, becoming their advocate, taking that company to market. We also work on the buy side, where we're working with corporations that are looking to grow via acquisition, helping them find companies to acquire. So we'll reach out to companies, we'll do a search of companies, we'll reach out to those organizations and say, are you prepared or willing to entertain an opportunity to discuss being acquired by somebody else? In many cases, we're raising their awareness of the fact that they're a desirable company, and so on. So the buy side, the sell side are two key components. On the consultancy side, we'll do a little bit of work with companies on helping them prepare for exit, but there's a lot of other people that are in that space. And the other thing I guess we don't do is we don't do money management. Let's say at the end of the day, when a transaction occurs and someone has that $20 million pool of money, we don't help them advise. We don't advise them as to how to invest that money. And we'll leave that to the financial professionals that do that all day long. We tend to focus in this transaction-oriented space where we feel like we can do that and do that well. And that's been our focus.
All right, just kind of a question here as we're kind of wrapping up our discussion here today.
Mm-hmm.
There's been a lot of talk about the legislative changes that are on the horizon that are going to have a profound impact, or could have a profound impact,
Right,
on business owners and what they actually end up realizing and putting in the bank after the transaction is done and all taxes and everything else are paid. What is your perspective on how that those changes might impact your world, and especially owners that are coming up in the next few years and are thinking of exiting?
Yeah, great question. Yeah, it's definitely a changing environment, and the initial proposal by the Biden administration that would essentially almost double the tax on capital gains for certain individuals that make over $1 million is pretty challenging for a business owner who's looking for that one time of their life event where they're going to have a big windfall in a given year. So that proposal, we don't think is going to happen. There's been some recent news that there are some proposals that are a little bit more moderate in their stance. The most recent that we've seen is a 5% increase in capital gains taxation, and nobody likes to see an increase in taxation, but that's a modest one that probably many people were expecting, and I think that will encourage certain people to want to take their company to market. But we found a number of companies that we took to market this year, in hopes of getting a transaction done this year. In fact, we have quite a few as we sit here in mid-September of 2021. You're trying to get transactions done by 12/31 of this year is important, and we have a number of those teed up. We clearly can't take a call or a new client on today and guarantee there'll be a closing by year end at this stage of the game, but we'll do our best, as the tax environment changes, to advise our clients of strategies that would help them keep as much money as they can, is legally proper in taxation. It will encourage certain people to move towards an exit when they're ready, or might push them a little bit faster along that path.
Well, what would you tell your 30-year-old self, Michael, with all the gray hair, or I guess not too many gray hairs up there, gray beard, huh?
Yeah.
So what would you tell your 30-year-old self of the accumulated wisdom that you have today, that you may have approached life a little differently back then?
Yeah, thank you. That's a great question. It's always a good one. Yeah, and it has been a while. I've got a little more time on the planet than Josh does, but with that, I've done a number of things. I pointed out I would, public accounting and chief financial officer, and work for a large corporate and venture capital. I think the biggest thing I would do is, if I could make a change, I would spend more time in this industry. I'm really enjoying my time in investment banking, and I think actually all those experiences have led to this part of my career, where I think I could take advantage of many of those things. But to get into this earlier would have been a lot more fun. I think I would have had a lot more fun working with entrepreneurs who I really value and really admire, and helping them monetize their life's work is really impactful, really meaningful to me, and I think it's just a well regarded reward for them at the end of their career, to have a great monetization that they can treat their families with, and take care of charities and all the things they want to do with their proceeds. And so I'm just honored to be working in this industry now.
Well, those are insightful comments, and I think that I've heard that repeated several times, that if I'd only known 20 or 30 years ago how much fun this was and how rewarding it was, and the career satisfaction of it is, being able to facilitate the realization of lifelong dreams. Done it a long time ago. So I appreciate that insight. So Michael, if people listening to our discussion here today want to reach out to you,
sure.
And Josh, what would be the best way for them to do that?
Yeah, we certainly, if you go to the Footprint website, you can learn a little bit more about the firm if you'd like, footprintcapital.com. Of course, we're available on LinkedIn and sources like that. Feel free to look us up, and our emails are out there and so on. That might be the easiest way, but I think you can contact us through many of those means and so on. So yeah, we'd welcome a discussion and see if we can see if there's a great connection, and see if we can help out.
All right. Well, this is Marvin L. Storm signing off, and we'll see you on our next episode, where we'll learn more about those deal makers that create the realization and fulfillment of dreams for entrepreneurs out there that have their companies and are looking to exit.
Thanks for listening to the Business Exit Stories podcast. For more information or to reach out to today's guest, visit www.businessexitstories.com for more details. Please subscribe, rate, review, and share this podcast from your favorite podcasting platforms. And remember, maximizing business value at the time of exit doesn't happen magically. It takes planning.